What is up, guys? Welcome back to another video. My name is Nash, and today I want to be talking about the insurance industry, specifically jobs you can do in the insurance industry related to finance, accounting, anything in business really. You can have a music degree, art, you can still work in the insurance industry, because if you even look at whatever school you want to look at, public school, they don't really teach a lot about insurance, like nothing about premiums, nothing about claims. I don't know why. You might have one or two classes, but they don't really teach about these things. So everyone that goes into the insurance industry, they're starting to learn from scratch. But if you do have a business background, it's going to be a lot easier for you to learn. Your ability to learn fast, and because it is a fast-paced environment, that's what's going to help you, not degree or whatever. So anyone can work in the insurance industry. So that's why I wanted to cover this, because it is one of my favorite industries to work in. I've been working in the insurance industry for a year and a half now. And I've worked on the premium side of things. I've worked as kind of like an accountant. I've worked as on the claims side. I've worked, I have a really, really great understanding of the business model. And my ability to learn really fast has allowed me to work in different positions in the insurance industry that allowed me to really understand the business model. But I'm going to be talking about some positions that you guys can look into if you're looking for jobs and you didn't know these existed. I know a lot of people have no idea these existed. All right, so when you think about insurance, you think about salespeople, people trying to sell you life insurance, sell you this and that. That's what a lot of people think about, right? And that's where it ends. But I'm here to expand your mind. I'm here to tell you a lot more about this. Maybe not all of it is going to be in this video because it'll be a really long video, but I'd love to make more videos on this because I have a really, really great understanding of the business model and how it works. All right, so think about this, right? Let's say you're trying to get a car. And you have to get an insurance policy first before you even drive it off of the parking lot or wherever you're buying it from. You have to have an insurance policy. Who do you call? The person you call works at an insurance company, right? How do they know what insurance policy to give me, right? It's someone's job to put that together. Now they'll tell you it's going to be $220 a month. How do they come up with that number? Well, it is someone's job to come up with that number, right? If you pay for your own insurance, you see it'll fluctuate or maybe go down. So if you finish, I think it's usually for 6 months, you have the same price and you have to renew your policy. If you want to stay with the same insurance company or change, if you stay with the same, you might see your amount go down by maybe $5, $2, or sometimes it'll go up, right? Now, how do they know to do this? It's someone's job to calculate that. All those are going to be jobs that are available in the insurance industry. Now you can think about what happens when you get into an accident and you can't afford to pay for it. So you call your insurance company, right? Let's say you have to pay like $1 million in damages and then to fix your car or to get a new car. They'll pay for all of it. So now you might be asking yourself, how do they afford to pay $1 million to cover everything when I've only been paying $200 a month for about 6 months now? I haven't given them $1 million, and that's going to be someone's job to make sure that they're able to afford to cover anything, right? So after they pay for everything and you want to continue to be with the same company because, they just paid off $1 million on your behalf and you see your premium go up by $50, right? How does that work? That is also going to be someone's job. So without wasting any time, let's go ahead and go into the video. All right, the first one is going to be an insurance investigator. So this one is pretty obvious. So essentially, if you've ever been in an accident or if you haven't, you can look it up. But essentially what happens is, let's say you get into a car accident, right? And your car gets towed to the nearest shop. Now, if you make a claim, the insurance company is going to send an investigator. So essentially what they do is they go ahead and actually look at the damages. They'll take pictures, they'll look at the car, and they'll send that off to the insurance company. And the insurance company is going to be able to really assess, the cost of the damages. Now, if we didn't have people like these, like the insurance investigators, what would happen is, let's say you get into an accident and your car gets taken to a shop and, they'll tell you it's going to be $5,000, right? Now, the insurance company would have to pay that much because that's what the shop said it's going to cost to fix the car. But now, can you really trust the shop? They're trying to maximize their profits, right? They might be getting expensive parts. They might be, just inflating the price. That's why they have these investigators to kind of like double check, to kind of like checks and balances, right? So essentially their job is to make sure that every claim is legitimate. It goes into other things as well, but that is kind of like the best example I could give you. Imagine if you could just make a claim and then it gets paid with no questions asked, right? Some people are gonna, scam and do things like that. So they need these people to kind of like investigate and double check these claims. Now, the next one is gonna be a claims adjuster. So using the same example I used for the insurance investigator. So let's say you got into a car accident and then your car gets taken to the shop and the insurance company sends an investigator, and the investigator takes some pictures, writes some notes looking at the damages. So he's going to send those notes to the claims adjuster, and they're going to be able to really look into it and adjust the claim, right? That's adjusting whatever the car shop said is worth. They'll look at the notes from their own investigator and they'll adjust the amount for that claim. So that's essentially what they do. They look at claims, they assess the damages, and then they extend an offer to whoever is receiving the money, which is essentially the policy holder. Or sometimes they'll just pay the shop directly. Sometimes they even cover it for a rental car and things like that. So that's essentially what they do. That's their entire job, to look at claims and adjust them accordingly, and then give you an offer or pay out whatever needs to be paid out. All right, so the next one is probably one of the most prestigious jobs you could have at an insurance company, which is going to be the actuaries. And it's surprising that a lot of people don't even know what this job is, and it is one of the most important jobs anyone can have in insurance. So essentially what they do is, if you love statistics, that's essentially all they do. So their job is to come up with premiums, right? If you ever wondered, how do they know to ask me to pay $150 a month and someone else with the same policy pays $200 a month? How do they know? So all this is going to come from actuaries, because they do the math behind that. They build models that predict, they kind of like tell you this is how much premium we should charge in order to be able to cover the claims. So if you find yourself, let's say you get into an accident and it costs $1 million, and the insurance company is able to cover that, right, to the full amount, and they're still in the business, how does that work? It's all because of actuaries, right? So their work can actually affect a company, right? If you have bad actuaries, your company is going to go out of business. Let's say you have, a client that has 10 employees that just, get sick same day. They have to go to the hospital. Each hospital bill is $1 million. Now you got to pay, I said, $10 million or $11 million, right? Taxes and things like that. Now, if a company with a great actuary is going to be able to cover that and nothing and still be in business, right? So that's why their work is so important. So their job is to calculate statistical possibilities of certain payouts, right? So it's like, if we pay out $20 million in a claim, we're still going to be able to be in business. And in order to be able to afford that, how can we charge our premiums? So things like that, things that actually affect the entire business model. Actuaries are really important in insurance. And, this is kind of like the hardest job to get in insurance as well if you don't have any experience. But there's exams you could take. So actuaries, I know they actually have to take exams. And the more exams you pass, the more you get paid more, the more responsibilities you get. So this is a really, really important job in insurance. So if you are really good at statistics and building models and looking at possibilities of things happening, this is going to be the job for you. Passing one of the exams will get you into the door, and taking more exams and passing them will get you promoted. So this is definitely going to need a lot of math skills. I know a lot of people hesitate about that. And you're also going to need to be able to work with the complex statistics as well. All right, so now moving on to the fun part, we have the underwriters. So this is a super interesting position, right? Let's use a different example. Let's say you work for a company. Now the company wants to provide insurance coverage for their employees. Now they go to an insurance company, and essentially what happens is they'll talk to the underwriters, right? So the underwriters will so their job is to actually look at the company or the person and calculating the risk of having to pay out a claim. So essentially, if you look at the business model on its own, money comes in as premiums, money goes out as claims. And to have profit, you have to have more premiums than claims, right? Because claims are going out, premiums is money coming in, right? So if you have more claims, then you're not making money because you're not collecting enough in premiums. Then you probably got to fire your actuaries or your underwriters. You're not doing a good job if a lot of people are making huge claims. So their job is to kind of like assess the risk. Now, let me make it a little more personal here. So if, let's say, for example, right, you are looking for life insurance, right, or medical insurance. Now, how they determine the premium that you have to pay, that's going to be based on your health. So the underwriters will look at your health. Now, if you are sick, if you have a chronic illness, you're probably going to be paying more in premium than someone who's healthy, simply because they are putting themselves at risk, because anything can happen to you if you're sick, right? Now they have to pay out that money. So that's why you see healthy people pay less in, when it comes to those things, and people that are sick, people that have health conditions, they tend to pay more because the insurance company is trying to kind of like collect as much as they can until they have to pay off that amount if it ever happens. And another good example would be when it comes to insurance for your car, right? So how they determine how much you pay, it's going to be based. One of the things is your driving record. Now, if you're a reckless driver, you probably have to pay more, right? If you have a clean driving record, you pay less, right? Now, that goes into if you go and get into an accident and it was your fault, your premium is going to go up, right? Because you're putting them at risk. Now you are risky, so they have to kind of like make as much money as they can just in case they have to pay out a claim on your behalf. All right, so now moving on to the next one, which is actually loss control agents. So their job is to protect the premium. Like I said before, the premium is the money that's coming in. Claims are money that's going out. So their job is to protect the premium and prevent claims. So these are actually kind of like on the ground agents. Look at, for example, if you work at an industrial area, their job is going to be to promote a safe workplace environment, right? Because if it's safe, no one's going to get injured and no one has to use their insurance to pay for the hospital. Now, if you want to go into healthcare, their job is to promote being healthy, such as flu shots and things like that are going to prevent people from having to, make a claim. So they're just protecting the premium. That is their whole job. Now, moving on to the next one, which is actually an insurance agent. So this is the one that a lot of people are probably familiar with, right? Because if you ever call to get a new policy, you're going to be talking to an insurance agent. If you ever get a call, it's going to be from an insurance agent. So this is going to be kind of like the bridge between the insurance company and the customer, which is going to be you, the policy holder. So their job is essentially translate some things you might not be able to understand. If you're calling about your premium, calling about how you can lower your premium, how you can make a claim, you're going to be talking to an agent. So you need really great customer service skills and an understanding of the entire policy itself, right? Because the customer can ask you any question. The last thing you want to do is be like, oh, I don't know, right? You want to make sure that you have all the information. So those were the most common jobs in insurance. There's obviously way more. There's hundreds of these jobs. So let me know if you guys want to see another video on this. I'll make it part 2, and I'll kind of like highlight some of the jobs that you could get in insurance and kind of like what they do. I know I didn't go super in depth on any of these. If you want me to go in depth on any of these, let me know in the comment section below, and I'll make an entire video on one of them, or whichever one you guys want to know more about. But if you looked at these jobs, I kind of like want to sum this up. So if you look at all of these jobs, you're going to see that these are all risk management, right? So the whole business model is really simple. Premium comes in, claims go out, right? And risk management is preventing claims from going out. That's preventing money from going out. And you want more money to come in and stay in and not go out. So for the most part, these jobs are essentially risk management, right? Now you can go into the specifics if you want to look into, claims specific jobs. You can look into that, premium specific jobs. I've mostly worked in the premium side. I've, worked a little bit in the claim side, so I have a pretty good understanding of claims. So let me know if you guys want to see videos dedicated to those topics. But that is pretty much it for this video. Let me know if you guys have any questions, and also make sure to go ahead and subscribe if you haven't already, and give this video a like. But I'll see you guys in the next one. Peace.